The markets are looking oversold, and Tom Lee just came out with a very long clip that gave me some insight. And I personally believe that right now it's a very good opportunity to look at the market as it bottoms. April 2nd is today, and we're going to get some visibility and insight into tariffs. And look, Tom Lee's team broke down the technical bottom, and I personally believe it's a good time to dollar cost average. And in this video, I'm going to talk about several stocks that are going to be a game changer if you take advantage of them this week. Let's watch a clip on what Tom Lee said. By the way, before I jump into the clip, today is the last day to join my course and bootcamp. This is the most unique opportunity of my entire channel's existence. See, the course is a full beginner to advanced course that has everything inside of it, 10 different modules. But not only is the course very cheap, very thorough, and has all the information that you need to learn how to trade options consistently, it also comes with a 3-week bootcamp where I will coach you live in a group setting. Today is the last chance to join. It is the first link in the description, and you can see more details about this full program. Now, I don't want to waste any time. Let's jump into Tom Lee. Let's see what he had to say, and let me digest this with you.
You were talking about some of the people that work in your shop, too, some of the technical people, and you were of the view that we were at least close to making a bottom. And off camera, we were talking, I said, maybe in terms of timing, it was about a month early, but in terms of how far the markets actually went down, you're not off by that much. I think the S&P was down about 6%. Now, looks like it's going to be, if it opens where it is right now, it'll be in correction territory again, down 10. But you have the same kind of feeling for this week that some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom?
Yeah, I mean, both. I mean, obviously it doesn't feel this way because over the weekend futures came under pressure, but we know markets are really oversold. We know that investors have had a lot of de-risking. And this week, I think into April 2nd, investors have 3 things on their minds. One is they just don't know what the tariffs look like. They don't know if it's going to damage the economy. And I think third, many are just a little terrified of the policies of the White House. But post-Wednesday, I think markets are going to have some visibility, and that allows us to take some of the selling pressure off. So, yes, I think it's possible that instead of us breaking down here and seeing markets under further pressure, we're actually got the right pieces for a bottom.
Into this without knowing what's on the other side of it? That is the fundamental question that people are sitting around trying to figure out today and tomorrow.
That's right. It's an interminable wait for people because it is still 3 days, and they're fearful that we could have 3 days of down 2%. But I kind of agree with Larry Fink. I think the U.S. is going to come out of this okay. I mean, Brexit's an example. Brexit happened, and the U.K. economy emerged okay. It didn't have a huge recession, and the stock market did okay. So for investors today, over the weekend, we had so many thinking the economy is going to completely fall off the rails after Wednesday.
Well, people are starting to say slowing growth and persistent inflation. So you put those together, and you get the stagflation. Yeah, that's death for.
Yeah. I mean, there's a lot of distortions of the economy now, right? Because we know people are buying cars and wine ahead of tariffs, and that's creating inflation.
Hopefully, they're not doing it the same, cars and the wine.
Do you think it's pushing up our growth numbers that we're seeing at this point between retail sales and other places, or is it too small to distort things on that great of a level?
I think it's possible economists are only dialing in the negative consequences so far, but not the positive, because rates are down and gasoline's down, and there could be some pull forward of demand. So we might end up having better growth, so less stag, and maybe the inflation stuff is more distorting, and so it's not as stagflationary.
You've had some of your recent calls that turned out to be prescient, bullish calls had to do with inflation not being as bad as people feared. Is that still what you think? Because some of the numbers have at least given a head fake that maybe it's still around, and you throw in tariffs. We just heard what Goldman Sachs say, a 0.5 point higher on the PCE than they thought previously, and 3.5 on the PCE is not going to allow the Fed to relax.
I mean, yeah, it's interesting because Goldman did raise their inflation forecast, but then they're talking about more rate cuts.
I know, which is because of growth concerns.
Yes, and I think we'll have a glimpse of what Fed Chair Powell's thinking because he's speaking Friday after the jobs report. And I do think that it remains a more dovish Fed than many expect. I mean, I think that's what was revealed after the March FOMC meeting. And not that I'm saying it's going to put a reversal of markets here, but I think investors are a little too scared heading into winter.
So what Tom Lee said is that investors are a little bit scared right now. And the reason why this is important is I talk about psychology very often. When you look at investors being skittish or scared of the market, that's the perfect opportunity to buy. Now, I'm going to be honest with you, I can't time the market. Tom Lee can't time the market. Nobody can. However, when you do see a lot of fear in the market and there's a lot of greed in the market and there's a lot of evidence to show that is the case right now, specifically because the White House is so unpredictable. The Federal Reserve is so unpredictable with interest rates. Given that information, it is a good time to put cash to work. Although I do understand many people are fully invested, especially on this channel. We have been selling put options. We don't have a lot of cash flow. Well, we can do the best that we can by selling some covered calls to generate income, as well as trying to put as much of the free cash that we do have available to work. Because you take a look at stocks like Nvidia, like Tesla, these stocks are oversold based off of RSI, they're oversold based on their valuation. And there's a lot of opportunity right now, I think, to get in if you're a long-term investor. If you're a short-term investor, this April 2nd date is going to be very important because we're going to get a huge move. I don't know which direction. I can't predict direction, just like nobody can. However, the technical bottom does look like it is in place. Unless a tariff situation comes out very unexpected, then we can move lower. However, investors have already been feeling unexpected. So there's not that much difference. Even if we get more unexpected behavior from, tariff situation, I don't really see the market going that much lower because a lot of this is already baked into the price of current stocks. I want to go over my portfolio real briefly. My portfolio is sitting at $3.7 million. My goal is to get it back to $4 million, and I would like to make 10% in the next 3 months. That is my personal goal, and my goal for our YouTube community is pretty much the same. I'm looking to recoup some of the pullback that the market has experienced. So if I can make a 5% gain in the next 3 months, that's going to be really good, specifically in this choppy market. Now, you will notice from my positions that currently right now, I don't really have a whole lot of Tesla, don't really have a whole lot of Nvidia. I have recently just sold off of an ETF where I made money. That was through my Discord community. And what I did was I wanted to put the investors in my community in a safer place where before April 2nd, I knew that the markets would experience more decline and more uncertainty. So we have been in a bit more ETFs and hedging ourselves with more value stocks, which is why you will see I have Kraft Heinz in my portfolio. I have a bit more Walmart in my portfolio, Apple, which has actually led me to a pretty big outperformance. Now, my goal is to jump back into stocks like Palantir. You see, I have 2,600 shares of Palantir, and Palantir is currently at $83 per share. I'm looking to actively purchase more Palantir at the $80 level. I will be looking to sell put options to acquire shares at 80 versus 83.61. I don't really want to buy Palantir at 83.61. I'm looking to buy it at 80. I can do that by selling put options. Now, Nvidia, same story. I would like to buy it at 105, so I'm going to be looking at selling some put options for 105. And overall, I think Tesla, I want to see a little bit more what happens with Musk. We see a lot of news, and I'm going to make a video soon on Elon Musk and what's going on with Tesla. But to summarize Tesla, I'm going to wait a little bit further, and I'm not going to start dollar cost averaging it just yet. You see, I have a pretty big position here on XLC. This is an ETF that tracks the communication sector. XLC, let me go over this real fast with you. I actually ended up dumping a good amount of money into this ETF because it has one of the top stocks that I like right now, which is Meta. It also has Alphabet, and Alphabet has the best valuation. And I wanted to buy Meta and Alphabet bicep over tricep. I was literally thinking I'm going to put a lot of money into it, but I decided to go with the ETF because I want that extra protection right now. And that's very important in this choppy market, is to reduce volatility, to still be invested in the market because the market goes up long term, but to be hedged as much as possible, reducing volatility. And this is why I have more ETFs, but I'm still looking to actively jump into Tesla, Nvidia, and Palantir. I have Palantir quite a bit, but I'm going to be purchasing some more. All right, guys, let's get that money. Bicep over tricep. Let's make it happen. And also make sure that you take advantage of the last day of the sale for the course and the bootcamp. I've combined 2-in-1 for a cheaper price than either one could even be. It makes no sense. And I'm doing this because this is the last course that I'm ever going to build. I built one in 2020. Now I built one in 2025, 5 years later. So I highly recommend that you check that out in the first link in the description. And I'll catch you guys in the next one.